The USA will become the crypto capital of the world. Currently, it is Dubai, but breaking news from the CFTC and the SEC about crypto innovation in the USA absolutely blew my mind when I read it. We're going to talk about what CFTC Chair Caroline Pham said and SEC Chair Paul Atkins said about crypto innovation in the United States of America. But we're also going to talk about what's going on with Securitize and their kind of attack on DeFi. And this all segues kind of into BlackRock and traditional finance and what's actually happening behind the scenes. So stick around for that because it's incredibly, incredibly important. And the reason why we talk about regulations and not just number going up on this channel is because under the previous administration, the SEC under Gary Gensler literally attacked every single good actor. Why isn't XRP pumping? Well, you can partially blame some of that on Gary Gensler. Why was Coinbase stifled? You could partially blame some of that on Gary Gensler. Why was literally almost every single legitimate crypto company based in the USA getting absolutely railed? Gary Gensler. And we wouldn't have gotten any of these crypto spot ETFs if it wasn't for the change in administration, but I digress. Make sure you guys follow me, subscribe, set alerts, drop me a comment. I read them all. I want to hear your thoughts and like this video. I want to get as many people as possible to watch this and understand what's happening and why this is such a bullish foundation precedent being set in the USA. Also, sorry, no live stream today. I'm in Vegas with VeChain. We've got a big announcement coming soon regarding the self-care lab. Anyways, so earlier this week, SEC Chair Paul Atkins came out on CNBC and said, crypto innovation exemption is coming to the USA and it's going to take place somewhat in 2026. All this means is that crypto companies can actually go in and they can register, they can be given guidelines without having to fear any type of litigation repercussions. Because again, that's what happened with Ripple and the SEC, which is completely unjust. And again, during Gensler's reign, that was life. We didn't know if crypto was going to be banned. We didn't know what exactly was going to happen. In addition to that, acting chairman Pham, Caroline Pham, love her, she came out from the CFTC and said that listed spot crypto products can now trade for the first time on U.S. federally regulated future exchanges. She highlighted this as a historic milestone supporting a golden age of innovation and reinforcing U.S. leadership in digital asset markets. Now, why is this important? This basically means that, well, first and foremost, we needed some positive reaffirmation from the SEC because most of the times they're the ones that are approving these crypto spot ETFs. And again, we have like 150 different crypto spot ETFs that are kind of pending on approval. Some have already been approved. The HBAR ETF, Litecoin, XRP, Solana, many, many others. But those are classified as spot crypto products. And now all of these spot crypto products that have been already approved, they can now trade on US federally regulated future exchanges in the USA, which is massive. And if you remember when Atkins first took office over at the SEC, yes, we're pivoting a little bit. He said that they're going to come up with a way to kind of exempt DeFi from a lot of regulations because DeFi acts a lot differently. And Hester Peirce kind of came out and said the same thing. And earlier this week, it was last week, she said it is a fundamental right for people to be able to custody their own crypto. And I agree with that. Basically saying you don't need to get into crypto with these spot ETFs. But for many people, they work because somebody else is custodying it, and self-custody is hard. But Citadel causes uproar for urging SEC to regulate DeFi tokenized stocks. This is according to Cointelegraph. So basically, they're like, hey, SEC, you need to regulate DeFi platforms. We don't like decentralization. And the firm argued that DeFi trading platforms functions as exchanges or broker-dealers and should follow the same rules as traditional financial intermediaries. The reason why they're saying this is because it impacts their bottom line, which is why Larry Fink from BlackRock for so many years had negative things to say about Bitcoin and crypto until they finally bent the knee, filed for their own Bitcoin spot ETF and are making that money. It's their most successful one. But Securitize is interesting, and the reason why they're so pressed about DeFi is because they are the world's largest tokenization platform. They manage about 4 billion plus in assets across BUIDL, USD, TB, VBIL, and more. And they're backed by BlackRock and Morgan Stanley. And of course, Morgan Stanley and BlackRock don't like DeFi because it undermines their bottom line. Because at the end of the day, you don't have to go through them to buy Bitcoin, the spot ETF. You can do it on your own. And the reason why this is all important is because if we had ruling under the previous administration, DeFi would probably be banned along with most crypto. Maybe we might get some of these crypto spot ETFs because yes, they were approved under Gensler, well, Bitcoin and Ethereum only, but at the same time, we would get a lot more restrictions because again, these people that are in office, they pay attention to who's paying their salaries, who's giving them that money. So moral of this story is, regardless that price action isn't the way it's supposed to be, we have some pretty strong advocates for crypto in the US for retail. And the regulation we get is not going to be perfect, but it is better than what we had before. And the cool thing about being here is you can always advocate for more and write to the SEC or the CFTC. So anyways, I hope this brings you some positive joy, because it definitely did with me. Goodbye.